Welcome, ladies and gentlemen. I, Sajjad Hussain, Head of Research at Alfalah CLSA, will be hosting the session today. As part of the Chemical Week, we have with us Engro Polymer, the sole producer of PVC resins in Pakistan, and a dominant player in the caustic soda market. Rabia Wafah, the Chief Financial Officer of Engro Polymer, will be representing the company. The session will begin with a brief presentation by the company, followed by the Q&A session. You may take over, Rabia.
Bismillahirrahmanirrahim. Assalamualaikum everyone. Thank you for all for joining us today. And thank you, Sajjad and Alfalah, for having me over. Obviously, the chemical industry is a main mover and shaker of the Pakistani large-scale manufacturing industry, and it's always a pleasure to meet investors who are making decisions which impact all of us. If I were to start, I'll start with some background, and we'll talk about the international market and the domestic market in detail as I go through. So we all know that petrochemical markets are very, very prone to boom and bust cycles. We work in a cyclical environment, and as market players, we're very accustomed to this kind of movement in our business plans. So, the strategies to tackle these are very simple. You tighten your belt in the downturn and you make the most of the upcycle, you expand, you make sure your capacities come in and you hit the right time. You have seen this for Engro Polymer in the recent past, for all those who've been following the fortunes of this company. We started in 2019 a PVC expansion and VCM debottlenecking plan. In 2017, we got approval. 2018, 2019, we were a little delayed because of COVID, but we hit the recent super cycle, the global commodity upmarket, the boom cycle perfectly in 2021, when in January we started selling. We brought in our 100 KT expansion for PVC, and in June 2021, when we brought in the VCM debottlenecking of 50 KT. So for us, we've seen that actually changed our fortunes. We've been able to make significant amounts of money and take advantage of the boom cycle. And now, as we move into the downward trend of the commodity market, we are also reevaluating our business processes and our strategies to get through this as easily as possible, with as little pain as possible. So there is currently a little bit of what you would call khula tazad in the chemical market globally. So what you have is a lot of capacity, and it's looking for demand, which is currently elusive. And we'll talk about later why that is happening. So there are lower operating rates, there are poorer margins, and these were supposed to end faster. We thought we'd be in a faster cycle than we've ended up being. If I were to talk specifically about Engro Polymer, last year we had highest ever PVC sales of 241 KT. In a very difficult market. 2021 saw the impact of 2022 saw the impact of the Ukraine war on Pakistan. It was followed by domestic political uncertainty, which was followed by domestic macroeconomic uncertainty. And on the economic front, we faced severe challenges from May, June of last year. And despite that, the PVC market held firm in Pakistan, and we saw 241 KT sales in a market that did around 245 to 50 KT market rahi in 2022. In the same time, we also were able to clock in exports of around 21 KT in PVC. And this year, in the first quarter, we've done around $6 million. $21 million last year and $6 million in the first quarter of this year. We'll talk more about this again later. We did import substitution. Exactly what we sell is PVC and caustic. Since we are the only manufacturer of PVC in Pakistan and caustic one of 3 manufacturers, and we play an integral role for both markets in the domestic economy. If Engro Polymer were to stop working, if we were not to manufacture, $134 million would have to be spent in USD in imports to support the local industry, which we currently support. In the first quarter of 2023, it was $23 million. In terms of VCM production in 2022, we had highest ever VCM production of 218 KT with more than 1 year of continuous plant operations, which is a huge deal for Engro Polymers. Since inception, this is the longest ever run we've had. Our long-term rating has been enhanced and short-term rating stands at A1+. We were also recognized as one of top 25 companies of the PSX, and we had digitization and efficiency projects that we completed last year. These include projects which involve Aspen Tech and other OVR, which actually allowed us to bring efficiencies in both of our raw material usage as well as our plant running. In terms of international markets, so So I was talking a little bit about this earlier also in my introduction to this industry, that PVC price, if you look at the graph on the top left, we've had a roller coaster ride over the last 3 years, 2.5 years. In 2021, we started off at historic highs of $1,400 per ton, and which we thought could not go any higher. And in 2021, we hit peaks in terms of pricing of around $1,800, $1,900 per ton also. Prices started coming down in November, December of 2021. But despite the Ukraine war, there was a lot more strength that the market showed. The downturn was slower. We saw more of a downturn in the second half of 2022. But 2023 has been, since the end of 2022, I would say 2023 is a lot more of the normal, stable PVC pricing that you usually have seen over the last 10, 15 years in the global market. So we've seen an uptick in the initial 2 months of the quarter on the back of renewed demand and restocking activity in India. But that again has gone back with, there's a hazy economic outlook. I'll talk more about it. But the last 2-3 years have been interesting in terms of a study of the chemical industry. What we have seen is that first it was COVID-19, which globally caused quite a bit of havoc in the global petrochemical markets. Markets went down, and then the upswing was pretty high. But more or less, growth did not come. There was the same supply chasing a lot more demand. There was a winter storms, there were other global macroeconomic events, but the growth in the inherent market was not seen. Just when the pandemic ended and last year we thought, the market is going to take off and build on the gains of 2021 in terms of market growth and expansion. The Ukraine war came, the cost of energy went up. It just didn't go up in Europe, actually. We have suffered the backlash in Pakistan and across the world, other than the US and certain other territories, energy prices have gone up. And what that does is that brings in soaring inflation, and that has a direct impact on industries like ours, which actually eventually serve customers. So petrochemical demand has been adversely affected by the Ukraine war, by the energy cost prices going up, and other macroeconomic events. The other thing that has happened in the last year or so is that from last year and early in this year especially, there were big hopes that we all harbored of China's recovery being very strong. A strong and fast recovery is what we were looking for in China. But China itself does not seem to be going on a strong and fast recovery tangent. It's a stable, measured increase that they're looking at for their economy also. What that does is that the world has always expected China to absorb all that it was selling. And China is not able to absorb so much anymore. China's internal capacity is feeding its demand, which is leaving a lot more out in the world in terms of supply to be mopped up by the rest of the global industry. So there are also doubts in that way whether China's historic growth outlooks will continue in the coming years. So that's what PVC pricing has shown us. Where the core delta you see, core delta is also obviously it's going to track the PVC pricing, but core delta is also currently standing at historic lows. In the last 7, 8, 10 years, what you had seen was core delta usually used to stay between $400 to $600 per ton. But currently, core delta is touching around $300, $350 per ton, which means that only the efficient players remain competitive and in a position to sell and create markets. We do expect that the second half will see the fortunes turn in the global economy as the geopolitical climate improves, as macroeconomic initiatives are brought in, and there are good reasons to hope and to expect that the Chinese economy will also open up and recessionary fears will come down. Upside is limited because there is also additional capacity coming up in Asia, especially again in China. Because from a margin recovery standpoint, the biggest thing is that, if supply is coming in and demand is not growing at the same level, there is pressure on margins. Agar main iski zyada baat karun, to I would have to say that, the biggest investments are actually being made in China in terms of the back end, ethylene वगैरह की तरफ से, and that is going to be helping us in the in terms of bringing down ethylene prices and bringing margins for PVC up, but not significantly. Supply crunches, coupled with volatility in crude oil, provide support to ethylene prices. Absolutely. Soft downstream demand, recessionary pressures. And of course, ethylene, as we are all aware, is impacted by crude oil prices. It lags crude oil, maybe it's slightly higher. Recently, it's been much closer to crude oil prices, but it tracks the crude oil price index and OPEC decisions. So any decisions made over there have a lag effect on China, on the global international prices. Hussain, if we can move to the next slide. Locally, if I were to look at Engro polymers in Pakistan, we work in two major markets. One is the vinyl market and one is the chlor-alkali market. So in terms of the vinyl market, what you see is that we've seen in the last couple of years growth of 5-6% in the market. We closed last year with a market of around 245, 250 KT. But this year, again, while the first quarter is looking decent, 52 KT versus 64 KT, which was a boom market in 2022, the growth in the industry is not expected to be there. We've spent half the year struggling with macroeconomic issues, and those have a direct impact on how industry operates. So while we continue to play our part, we're promoting other downstream applications. We have made Think PVC significant investments. We are using our Think PVC platform to encourage our domestic customers, domestic producers of PVC down market items to look at export markets. We're connecting markets through our Think PVC platform. What we are seeing is domestic market will still be muted in 2023. At least following the trend in the national economy. Pipes and fittings remain our bigger. If you can go back, Hussain. Pipes and fittings continue to be our biggest chunk at around 53%, followed by film and sheets of 17% and around 8% cables and profiles. Next. Our other big product is chlor-alkali. So in terms of volume, if I were to look at it, chlor-alkali, we have actually pivoted since last year, and we have been doing a lot more export out of Karachi. What we saw was actually that the industry was balanced in Pakistan, and we realized that we would need foreign exchange dollars to import raw material, for which we needed to create a market. So from last year, end of last year, Engro Polymers has been exporting caustic liquid. We did around 15 KT last year and around 4 or 5 KT this year in the first 5 months also to bring in FX, which allows us to open our raw material. So, a direct export contract or dollar inflow helps with the banking instruments more than, but as a import substitute, which is the thing, which is what we have focused on in the past. PVC exports are not as easily doable or as lucrative as chlor-alkali. In fact, not that chlor-alkali is much more lucrative, but margins are better. Export margins for chlor-alkali versus PVC. So we tend to balance both of these to ensure that we are creating export markets and future-proofing our import LC, which allow us to keep our business running. The primary aim of Engro Polymer remains to serve the local domestic market of Pakistan, which in the recent past has been growing, and we expect because per capita PVC consumption in Pakistan is much lower than the neighboring countries and in the region, that on a normalized level, 6% is the growth that we expect this market to achieve over the next few years per annum. Next up. In terms of full year 2022 performance and 2023 performance, gross profit margins have dropped in 2023 as prices have dropped. 2022 had lower core deltas and lower margins, and then 2021 were still significant in the first half of the year. 2023 has been a very muted year in terms of margins. In fact, we are definitely not in the boom cycle where we can expect to enjoy rich margins and profits in a globalized industry, because competition is literally an import consignment away. So you have to focus on efficiencies and belt tightening and making the most of the domestic and export market. And every rupee counts in terms of margin. which is what we focus on. In terms of profitability, 1.2 billion rupees in this quarter, and net profit of 7%. We gave a share dividend also, and 1.3 rupees per share EPS. Also, yes, lower gross profit had two components. One was obviously raw material pricing, but another big one was LNG. So from December last year till February of 2023, Engro Polymers was operating on our LNG. We took our annual turnaround for our shutdown cycle in January, but still LNG pricing $14 at I think it was around 300 rupees or 280 rupees per dollar. Sorry, not 300. 260 to 80 rupees per dollar in the beginning of the year had an impact on our margins. In terms of the decline, that's primarily, as written, attributable to the decreased top line, inflationary pressures, and the increase in finch. Other than this, we are, as all of our competitors and the entire industry at large, we are facing unprecedented inflationary pressures, volatility in the PKR USD parity, which directly impacts us because it impacts our margins. And along with volatility and uncertainty in the parity, also has an impact on our market outlook. Higher fuel prices, rising interest rates, all of these come together to form a picture which is reasonable but not very bright in the short term. Next up. Looking forward, so very grim challenges that we see over here: reduced core delta, continued supply of gas at economically feasible rates is something that we're looking for. An increase in the cost of doing business given unprecedented devaluation and inflationary pressures. Supply chain disruptions, we have not faced these in 2023 as such, but disruptions in supply chain, not so much from COVID-19 related lockdowns in China, but because of our own internal banking sector issues in the state bank and the current account deficit, capital controls that Pakistan is experiencing do have an impact sometimes on supply chain disruptions. Alhamdulillah, Engro Polymer did not face those, but some of our neighboring industry did face those issues. So macroeconomic challenges obviously remain. And looking forward, however, we do feel that the first 5-6 months, despite everything have gone largely as per script or as per plan. In November, December, we were expecting the situation to be very muted, and we were expecting it to not be we were expecting Engro 2023 to be the year when batten down the hatches and get going on efficiencies and pulling every rupee out of our margins, and that's what we are working on. The key focus of this organization this year is ensuring safe and sustainable operations and completing our ongoing projects, the HPO and HTDC project, within timelines communicated. We have rising inflationary and interest rate environment, and which will impact our customers, and we work with our customers to ensure that. I think I'll take questions later. We will continue to work with our customers and our suppliers to ensure that the domestic economy of Pakistan is provided with the PVC it needs to continue to provide to its customers. Active management of the challenges with the establishment of LCs, we continue to manage it. We have Engro Corp, where our group treasury resides, and we have Engro Polymers. We work together with the Corp and our banking partners to ensure the establishment of our LCs. And finally, the continued increase in cost of doing business will affect margins. I think this is a moot point. It's not very unique to Engro Polymers alone. From my end, that would be the last question. I think we can go on. So if I were to put it in summary, I would say that margins for petrochemicals will stay under pressure this year and probably for much of the next year also. Players like in Pakistan will continue to play on margins domestically and via exporting to markets where more lucrative margins abound. Even if the volumes are lower, we do smaller size exports for more margins, and that helps us create some value for ourselves. So the hope is that obviously that the past will repeat itself and the cycle will reverse. We do expect that this is the bottom and we're through with it, and we're expecting the next couple of quarters to show some growth in the margins for the PVC sector. There are also internationally a lot of new disruptive forces, sustainability, the need to decarbonize our solutions, our feedstock, our energy needs and a sustainable growth path, which a lot of our international global supply chain is experiencing. And that obviously makes for a very challenging time in this industry as such. So Sajjad, I'm done.
Okay, thank you, Rabia. I would request participants to please write questions in the chat box. In the meanwhile, I'll start off with the questions. So the demand has been slow this year, right? And but what are the measures that the company is taking to increase the penetration of PVC broadly? Are you going downstream yourself? Are you planning to do that, or are you doing anything besides the Think PVC project?
So we move a lot of our downstream work and our downstream market development activities happen on from our PVC Think PVC platform, Sajjad. And a lot of the things that we're doing are we're looking for our customers, who are also B2B customers, to pick up more PVC, and we're also providing avenues for them to sell their PVC products, which is pipes, pipes, cables, profiles, sheets, downstream. Certain projects we work with the PSQCA on quality standards and we've worked on several tenders with the industry to bring PVC in as one of the materials of choice in BOQs, in the MES, MES military state services के जो contracts होते हैं, so that PVC has a level playing field, and it can also, that market can grow where currently wood is used in the construction sector. So those we've actually been working on since last year. 2023 has been the year when we have actually done a lot more of that work. Because market development actually will be what grows our business in this year. And this is not new again. In down cycles, this is what you focus on. Focus on when your customer does well, you do well. So, it's counterintuitive to squeeze your customer. It is intuitive as an industry, as a growth player in an industry, to show your customer avenues for growth so they take you along and you grow via your customer. Another thing that we are doing is so also through the Think PVC platform, we are connecting our customers and we are looking for export opportunities of downstream PVC products, which are further down in the value chain, which create more value than, for example, exporting PVC resin. And so that's also being actively explored as a market.
And you just mentioned that you're foreseeing a turnaround in the margins in the second half of this year, the core delta, right?
When I said turnaround, I mean more that it will be stable. We don't expect a boom. Like I said, India has come back sluggishly, but India probably has the most scope currently in 2023. China has been sluggish and the US has not grown as fast as we had expected. So the US interest rates will probably start going down early next year. And that is when the US demand will pick up. China, somewhat of the same, maybe end of this year, third, fourth quarter is when we expect that Chinese interest rates come down, mortgage rates come down, this sector picks up. Global macroeconomic activity picks up.
Correctly, if we draw parallels to the post-recession period of 2008, I think the margins were hovering between $200 and $300, which is still lower than what they are currently trading at. So do you expect that the market may move a little downward further?
So in that time, if I remember correctly, in around 2015, they went down to around 200, 250. But for example, since 2010, if I were to look at it, 400 to 600 ki range mein hi rahe the till 2018, 2020. We don't expect market margins to go down that far, primarily because that would involve a massive demand destruction internationally. That is not what's happening. What we are seeing is a lot more capacity coming in from China. And we are used as the world to China absorbing or soaking up the world's excess capacity. And that is, I think, a change that we will see as an industry, that, the rest of the world, other than, after China, it was India. So the rest of the world will also have to grow its market. So yes, no, $200 to $300 per ton is not something that we anticipate. We do feel that this is bottoming out, maybe slightly lower, slightly higher, but it'll be either stable or going up from here, largely.
For the past 4.5 years of maybe 5 years, the PVC demand broadly has remained stagnant, right? So what is the key hindrance in the market growing?
So, that's the conundrum. I could give you excuses, but but primarily, if you were to look at it, the last 4 or 5 years have been, and we have short memories. The last 4 or 5 years from 2019 and 2020 have been unprecedented in the challenges that you see in the globally and locally. So 2018, 2019, you saw stiff demand increase, market growth in PVC demand in Pakistan. 2020 was a dip, which was primarily on the back, I believe, of COVID. And globally also you saw a decrease. 2021, all that pent-up demand from 2020 flew through. The market grew, I think, at around 6-7%. 2022, it was lower growth. 2023, again, unprecedented times, so to speak, for us. Even 2022, if you were to look at it, globally, you had started seeing prices come down and margins had started shrinking. Pakistan was able to ride that out because we were, for the first time in a while, we were a little isolated from global geopolitical events. They were not happening in our backyard. So this region managed to remain a lot more stable than, for example, Europe. So we felt the aftershocks in terms of the energy crisis and the electricity prices going up and power prices going up, but we were not first-hand dealing with the ravaging of war on our economy. So that is primarily the reason why market growth on a CAGR basis will be disappointing. You're right. It will be around 235 to 38 KT in 2018, 2019, 245 to 50 KT in 2022, which is dismal. So it goes up and comes down. And I think that's something that as an industry, as a key player of the industry, we need to focus on.
And what are your expectations for 2023 and 2024? Where do you see the demand like? And do you see imports still contributing some portion of that demand?
So actually 2023 and 2024, I think market will be lower from last year, probably from last year, because actually in the first quarter of the year, the capital controls and the lack of import, the LCs being open, had an impact on the broader economy because my customer, for example, is also looking for LCs. It's not just PVC that they have to import, right? Even if I give them PVC, they have their catalysts that they have to import, their compounding solutions they have to import, they have their DOP, DTP, whatever it is. So all of those require access to banking channels and international banking instruments, which the first quarter ki jo demand ab reh gayi hai, jo market nikal gayi, that's now out the window. We continue to sell well, but it was not like I showed you. We sold 62 KT in 2022, the first quarter, and 52 KT, so to speak, in 2023 first quarter. So that demand that had dropped in the first quarter will not come back in the second, third, fourth quarter. We do expect a reasonable demand, and it will hover above 200 to 210 KT for the entire market. In terms of import, Sajjad, and it's not an ideal situation, but with capital controls being the way they are, it will be difficult for imports to make major inroads in the domestic industry this year. Obviously, competition keeps everybody, fast, and it keeps the market edgy, and it works in the big picture. But we are seeing we have made a certain investment, and we are ensuring that our customers see the fruits of that investment that we made in 2021. We continue to supply the domestic market. We do not anticipate that the domestic market will be left high and dry without product to meet its capacity and its aspirations. So that would be what my opinion on export.
So they don't currently have any significant market share right now, the imports?
Importers must have, 5-6% must be there because the LC is opened in October, November, will be landing. The actual crunch in LC opening in banking instruments has come in this year.
Yeah.
So we did have a 5, 6, 10 KT of import in the first quarter.
So in regards to exports, you still have a lot of capacity in PVC, but I think your bottleneck is VCM, because without VCM local production, the exports doesn't make sense, right? So please.
Go on. No, sorry.
So your capacity for VCM is around about 254,000 tons. And even last year when margins were high, you were able to manage only 218,000 tons. So why are you not able to achieve that full capacity? Is there something wrong in it?
No, there's nothing wrong with it. But for example, 245 KT is the production that we can do. It's not a balanced site right now. We can do 300 KT of PVC and 245 KT of VCM. Last year we did 218 KT. Plants work on a concept called service factors and capacity factors. We take turnarounds. So 245 KT would be if this plant ran full stretch, full load, 365 days a year, 24 hours a day. Plants have ups and downs. For example, we do have to reduce our loads based on the gas issues that we face. There is certain wear and tear. The plant is currently on an LTR regime. We are looking at long-term reliability, which is spread over 6 years that we are doing on the base plant that was installed in 2008. And we do take turnarounds of 25 days every year currently to make that LTR regime work. So we do expect probably you'll see around 245 KT once in a year or so as the LTR regime work comes through, and you see the results from it. That's what it is. So we complete the remaining the shortfall with imported VCM. And imported VCM pay, yes, on a standalone basis, export margins don't always make sense, but in a rising market they do make sense. So in 2021 they made all the sense in the world. But on a blended basis, export are still viable.
You just mentioned that we are facing issues with the gas containment, right? So with the depleting reserves locally, does the company have any contingency plans in this regard?
Yes. So we're actually working on a couple of things. We remain in touch with, in close contact with Sui Gas and with the industry for resolution of our gas needs for our power supply. We're also working on certain other projects. I cannot really talk about them. They're not public information right now, to secure our reliable power need for in the near future. So yeah, this is something that we actively are working on. Where gas is concerned, the question may eventually, Sajjad, fall not to no gas, but rather the price of the gas available. And that price will have to make sense for an industry, from an industry perspective. Currently, we get gas at indigenous price, but as an industry, at some point, the Ministry of Industries will have to figure out a solution. I believe APTMA has recently put up a proposal for export tariffs, regionally competitive export tariffs for export industries. So that's another thing. As an industry, the entire country's industrial companies are looking at this issue in a holistic way.
Last year you were shifted to RLNG in the winter months, right? But do you see this being a new reality, at least in the near term?
Yes, I have a very strong feeling until the national energy crisis is resolved, Sajjad. We will all see this. It's a recurring theme from December to January, probably. It's something that, which is why, for example, Engro Polymer plans its shutdown, such that, we're not, unless we don't have our materials available.
Are you facing any difficulties procuring your raw materials given the current LC situation?
First quarter was significantly more difficult. We did not face any production delays or any production shutdowns because of this. But yes, from January till March, we had to do a lot more legwork to get our import LCs open, because without ethylene, Engro Polymer cannot produce PVC or caustic. So we did have that. The caustic proceeds from the fourth quarter of 2022, export proceeds held us in good stead in the first quarter. And we continue to, export and kind of try to maintain our balance, so to speak.
So are you allowed to net all of your imports against your export proceeds, or is it no?
Yeah, there's no netting off. But it makes easier for the bank also to manage your import requirements if you're also able to replenish their stock, so to speak.
In regards to
but as such, there's no philosophy of netting off imports from exports, any that we've heard.
In regards to caustic, so what is the demand outlook like, and what is the current market structure in regards to north and southern demand?
Caustic demand continues. There is no slowdown as such in caustic demand that we are seeing. Caustic, again, globally, if you recall, last year was a bonanza year for caustic. After I think eons, caustic was through the roof in terms of its pricing and its margins globally. That was, again, a direct result of the Ukraine war, which impacted energy prices, which impacted Europe most, which impacted their caustic reserves, and they were pulling it in from the world. What's happened now is that European energy prices, they have stabilized because of the gas storage levels being very elevated over there, which means that there's weak demand. So with the import domestic industry limitations, they are actually exporting caustic. The caustic prices have dropped to around $430, $450 per ton. In fact, around $400 per ton now.
Dollars on CFR Karachi basis?
No, this I'm Southeast Asia, South Asia basis. Karachi basis is very different. Because actually I'm looking at more export than from a local basis. In terms of where it is, export has been offered from Europe also. China and Pakistan, even though caustic on a standalone basis might not be the most lucrative product, on a blended margin basis, it makes a lot of sense to use caustic. Domestically, North market is supplied by Sitara and Etihad, and we supply the South market. Primarily, we have customers in the North, but primarily we supply the South market. We have actually reduced our presence in the South market because we've been exporting a significant amount. And for us, probably the strategy may continue in this year.
What you are saying is that export margins will attract a higher margin than local margins, or is it to hedge against your LC restrictions? So actually, the northern players have captured the southern market, which you've left.
Yes, and we make money of PVC, which they don't have. So on a blended margin basis, it still makes sense, as I said.
What about Central Asia? Because of course, it's a new development market for us in all regards, especially PVC and caustic both. So where do you see that Central Asian story playing out? But do they have higher margins as compared to the southern, as compared to exporting from sea? Is it viable logistically?
Yes. So it's a smaller market. Central Asia is growing and opening. And what we're seeing in Central Asia is an increased demand and thirst for petrochemical products out of Pakistan. I think one recent issue that we seem to be facing, which I think will be resolved within the banking channels, is Central Asia, a lot of freight happens via the Afghan transit route through Afghanistan. And certain restrictions are holding Pakistani banks back from accepting payments for cargoes which go via the Afghan transit route. So that's something that the banking sector is trying to sort out. We've recently seen this problem, and I think it's how some things spike up and then they're resolved. So that's something that the banking sector is looking at.
What is the new timeline for hydrogen peroxide plant commissioning? I think that you mentioned in your report that it's facing further delays now.
No, I said communicated timeline. So hydrogen peroxide was supposed to come in 2023. We are still expecting it end of late 2023. We did face delays, to be honest. We did face delays in the first quarter of the year when a lot of our shipments were supposed to happen, when we could not open our LCs. And LC payments were also an issue for our Chinese vendors. But those issues have now been resolved recently, and we are now receiving our shipments and working to complete project on communicating timelines. Because obviously HPO is also making a lot of money, so the sooner we bring this plant on stream, the better it is.
Then there's a question in regards to update on VCM expansion. So is it happening currently, or is it currently on a back burner?
Well, we are currently in the middle of a FEED, which is a front-end engineering design for VCM 300. In the long term, VCM 300 is definitely happening because a balanced site gives you a lot more room to play in terms of export and domestic markets and margins. Whether right now, so the FEED comes for approval end of this year to our board, maybe early next year. Whether this particular point in 2023 is the right point to make an investment decision at a time when the country itself is not very gung-ho on imports and their capital controls in place, is something that obviously our board will discuss. But the FEED, the front-end engineering design, is very much on, and we are very committed to that project at the moment.
So besides the winter months, you're not priced at LNG pricing in the remainder months, right?
Not right now.
Okay, what is the duty structure for PVC and ethylene? Or are you expecting any changes in the upcoming budget?
Making your guess is as good as mine. So we do expect changes in the tax structures. It's all been discussed. It's all over the news. The duties taxation, for example, the proposed taxation, we don't expect it to really have a very major impact on Engro Polymers because we have been declaring sufficient dividends in the recent past. Duties maybe we'll take it as it comes.
Because
There's no point in speculating on this.
caustic soda's duty is fixed in PKR, right? So do you think it will be repriced indexing with the current USD PKR rate?
Your guess is as good as mine. If it is, then see the question I have for you is if it is, then it is. Then as an industry, we will because we actually caustic soda supplies to the textile industry, which is going for export. If you increase textiles cost of production, then we're shooting ourselves in the foot because the bigger aim is dollars, export dollars, right?
You get your gas at the captive power rate or the industrial rate?
Primarily captive.
Interesting question. Are you planning to produce PVC from coal like China?
No.
Not at all.
If I can be more emphatic. There are sustainability concerns. The technology itself is not the most advanced, and bringing freight, trucking coal over may not also work. But yes, probably if you were to check at the Engro Energy and Engro Corp level, there are discussions on how coal can be used for other purposes, value additive purposes than just energy power. But no, not PVC.
So I think we have someone who's raised hands. Hamza. Hamza, can you unmute yourself and ask the question, please?
Yeah, sure. My question is directed towards your caustic business. And looking at your segment analysis for the past few years, तो उसमें हम देखते हैं कि your profits used to lie in 800 million and 1.5 billion range. But last year only, in 2022, you booked a profit of 4.3 billion. So wanted to know the reason कि ये जो इतना massive increase आया है profitability के अंदर क्या है, and at the same time इसी तरीके से हम आपकी costs देखें for this business, तो वो over the period decline किए and profits जो है वो significantly increase कर गए. तो your comment on this?
So जब हमारा post the expansion of 2021 जब हमारा बेस बढ़ा है तो a lot more of our cost is now being loaded onto PVC because वो fixed cost is loaded as a percentage of revenue top line. So primarily that would be it. Caustic margins were very good last year because prices had gone up, but they're not so. And we did make lucrative margin on some of our export transactions last year. And that was, we were able to take advantage of a short blip in the landscape where, because of rising energy prices in the US, in Europe, caustic production and caustic supply became an issue and prices shot up and we were able to export some.
Rahman also has a question. I think you can unmute yourself.
Thank you. Thank you, Rabia, for the presentation. I have a couple of questions. First one is related to your LNG supply in December. So what is the company's target for the inventory going into December? I know you have LC's issues and those issues will actually determine the kind of inventory you end up being. But from a company point of view, are you planning to carry like 2 months inventory once you reach that December time period?
So are you talking early December or end of the year?
And end of this year when you'll be receiving LNG. So company would prefer producing on the local gas.
Our considered opinion is that policy is that where possible we try. Obviously, their management makes decisions based on how the market is performing and how we expect the market forecast to be in the very near future. So the actual decision could change closer to October, November of the year. But I anticipate that we will be keeping 1 month of inventory, 1 month of sales inventory on our books in end of December. Primarily that's because, our customers keep producing. So we have to ensure if you are the sole manufacturer of PVC in the country, you have a responsibility to ensure a sustainable and regular supply of raw material for your customers. And that is something that we always endeavor to provide. So.
And what is the company's target for caustic this year? And if you can give the breakdown for local and export as well.
Target, we will sell whatever we produce and we will find the best possible use in terms of domestic or export, depending on what our playing landscape looks like. If we need to secure USD for our import LCs, we may do more, and PVC exports are not making sense, we may do more caustic exports. So last year, it's a blended decision.
Yeah, I understand the export and local dynamics keep changing. Last year, it was around 100 KT. So are you expecting a decline or more around the same levels for 2023?
Say domestic plus export,
Yes.
more along the same line.
All right. And the last question related to the H2O2 technology. So I'm very naive when it comes to chemical processes. So you already have the hydrogen. So is my understanding correct that you will be blending the hydrogen with oxygen to make hydrogen peroxide, or what is this process like? Is it energy intensive, or if you can explain this a little bit?
It's not energy intensive like caustic production is energy intensive. To be honest, I'm just slightly much more better educated than you on this process. But yes, we have hydrogen that we're currently using for fuel and venting that we will be using in this process. And in the presence of catalysts and chemicals, we will be blending or combining this with oxygen to produce hydrogen peroxide, H2O2.
Thank you so much.
But you've raised a good question. I should find out the chemistry behind this for my own personal growth. I think we're done, Sajjad?
Just last question. Our Chroma yesterday mentioned something related to unsaturated polyester resin. So do you think that it's your competitor or does it complement your product, the PVC resin?
It's a different product stream. Does it cannibalize me? No, it doesn't. For example, it cannot be used in pipes as such or cables or profiles. So it has different uses. It will definitely grow the pie of the market, and it's a good one to have.
Okay, so I think we are done with the product questions. If you want, you can give a concluding remark.
No, I think I gave my concluding remarks already, but if I were to repeat myself, yes, Meroz, it's a different product, but it will grow the market. So if I were to give my, 2 bits at the end again, it would be that, margins for petrochemicals will stay under pressure this year and probably for much of next year also. We expect them to slightly move up and stabilize. We don't expect them to go further down. But I think rich margins and profits in a globalized industry where you're expecting competition is just an import consignment away is unlikely in the more near-term context. We are expecting stable margins and solid growth, but a lot of this has to do with the domestic macroeconomic environment, and the sooner that is supported and propped up, the sooner industry in the country can start flourishing again. Globally, also the US, China, India, 3 markets which have a major role to play in how the global petrochemical industry pans out. So the sooner the US snaps out of it and moves on an upward trajectory, and China's growth picks up, the sooner the global petrochemical industry as a whole, not just PVC, will rebound. Supply is very much there. China has been investing in supply. So if I were to really talk about it, they have around 28 million tons of cracker expansions from 2018 to 2024 that they're bringing in. New ethylene capacity helps us because ethylene prices go down, but then there's associated industries also. There are new products, new industries also, ethylene key, which China is looking to set up. So definitely China continues to invest in its own chemical infrastructure on the lower end of the scale, and that will have impact on the global macroeconomic. Prices will drop if you cannot sell everything willy-nilly to China. That would be my closing statement. The future does not look bleak, but it's not like shining roses either. We will.
Thank you, Rabia, for
we will
taking
see you
the
there
time.
in 2022.
Yeah.
Thank you.
Sharing your insights. I hope we can do this again, maybe next quarter or 6 months down the road.
Inshallah. Looking forward. Thank you.
Thank you. Thank you for your time.